Okay, so I'll now like to introduce our board member for the UKIFC, Richard Belder, and he's going to be doing a short presentation on SDGs and the role of the UN PRB. Richard? Thank you.
Good afternoon, everybody. This is just going to be a short presentation. Islamic Finance Council has been heavily involved in the ethical finance space for many years. We've been running workshops on ethical finance issues in Edinburgh for many years, and arising out of that, we've got these various summits, and I'd like to say thanks to ISRA for them providing support to this summit, as well as our sponsors. We've been very interested in the concept of making Islamic finance more wholesome. Speakers have been talking about the concept of tayyib earlier this morning, and we see this as a continuum of our thinking that leads into SDGs and the recent PRB, the UN PRB. So we see this as a big opportunity for Islamic finance to move the dialogue away from the substance over form debate and to use the SDGs and PRB and PRI as a way of creating a new approach for Islamic finance and a new dynamic. Now, UK Islamic Finance Council is the first Sharia advisory body to actually have signed up to the UN PRB, and we were recently in New York a few days ago with Charles from Gatehouse when the UN PRB was announced, and we got various partnerships with the UNDP in various areas to try and promote Islamic finance and to progress it, and in particular in relation to the SDGs. Now, what we are currently doing is two things I'd just like to briefly talk about. We are working on a research project that is looking at the SDGs in particular and how they interrelate with Islamic finance. And the aim of this research project is, as we always do, is to try and focus on practical outcomes that can help the Islamic finance sector to develop. So it's really broken down into three sort of components where we've started a desktop research. We're talking with various Sharia scholars, and then the final element will be talking to C-level management. We intend to issue various thought leadership papers over the next 12, 18 months. And again, ISRA have been very supportive of this. As a not-for-profit organization, we are also interested in speaking with other people who might want to partner or even sponsor this project. So if you're interested, have a chat with me or Omar Sheikh, who's standing at the back there. As I said, it's still a work in progress, but I just thought I'd share a few things that have come out of the discussions that we've had. Some of these issues actually already come up in the earlier panels. But I think one thing that's come out is perhaps a more nuanced approach needs to be taken when you're talking about how much support there is for SDGs. I think it depends really on which part of the world that you're looking at. Clearly some parts of the world have taken on the SDGs and the ESG environment to a greater degree than other countries. So having sweeping sort of statements that the world has taken on board these concepts is wrong. One has to be a bit more focused in terms of geographical areas. Education has come through very clearly from the discussions we've had with various stakeholders. There is different levels of understanding of the SDGs, and probably more important, how do you take the SDGs and translate them into practical steps that an organisation can take in order to take the SDGs on board. Embedded with that, I think, is a challenge for any organisation that wants to change its culture or its basic mission statement. If you look at change management theories, there are different ways of doing this. Is it purely just from a top-down approach, or do you have to involve all of the staff involved in the project? Do you introduce systems so that, for example, if a bank executive was to turn down a project because it wasn't meeting your SDG criteria, and that means that he or she won't meet their individual annual targets, or the department that they're working for misses their target for the year, does that mean that they will be punished financially? So the whole concept of taking on board SDGs involves a change in culture, and as I said, there are different ways and different approaches of taking this on board. Another issue that's came up is in managing commercial realities. And again, this has been mentioned before in some of the other sessions. There's a lot of pressure, of course, on board of directors and top management to be profitable. There are concerns about, well, if we adopt the SDG approach, will this affect our profitability? And again, this goes back to what was touched on earlier. Are you looking to maximize profits or to obtain reasonable profits and a different return based upon social justice and social good? How far down do you want to impose SDG policies? By this I mean, do you just limit looking at a project at the credit committee approval process and say, yes, it meets our SDG criteria and therefore we'll make the funding available? Or do you monitor that project on an ongoing basis and inbuild provisions that allow you perhaps to call an event of default and call in the financing if the borrower doesn't fulfill those SDG requirements on an ongoing basis? Some interesting points have come out in relation to the Sharia boards. How far should they be involved in the creation of your SDG criteria and programs? Do you just produce them as the management and give them to the Sharia boards? Some Sharia scholars have said, no, we want to be involved actively in the preparation and formulation of those principles. If you're going to ask a Sharia board to approve a project as being not only Sharia compliant, but in compliance with an SDG criteria, how are they going to do that? One approach, it seems to me, is to have pre-approved like checklists that you apply to a particular type of project and which the Sharia board is happy with. And then you have an approver, whether it's within the organisation or external, that will then sign off on a particular project. That report is then given to the Sharia board, which then doesn't have to do any more investigations other than to say, well, this report's been produced in accordance with pre-approved principles, and therefore we're happy to sign off on it. So these are some sort of issues that have come up, and as I said, this is an ongoing research project, and we will hopefully be issuing various thought leadership publications over the next 12 to 18 months. The second and final point, which I think Omar Sheikh has already mentioned earlier this morning, is that we have been talking to the government about setting up a Islamic finance SDG task force, which would be international in composition. And as Omar mentioned, just yesterday afternoon we got the word from the government that they will be supportive of this. And so now we're building out on that to create a task force. And the aim there is to try and sort of collect different views and to see how, in practical terms, and again I stress that, in practical terms, how that task force can help the industry, the Islamic finance industry, progress in this area of the SDGs. So that's it from my part, and I think we'll hand it over to Qudeer.
Assalamu alaikum. Good afternoon, everyone. Thank you for coming back after the lunch session. So welcome to the fireside chat. We're going to be talking about what do the PRBs and the SDGs fit in for Islamic finance, and is it an opportunity or a threat? And thank you, Richard, for your presentation and putting the session into context. So some would argue there's a natural crossover between Islamic finance and the PRBs and the SDGs. I mean, as we've discussed this morning, it's not a 100% overlap, but clearly there are significant areas where there is alignment. I mean, even if I was taking a look at the SDGs again to refresh my own memory earlier today, but if you look at SDG number 1, no poverty, and Zakatul Mal, and for those of you who don't know, that's the compulsory tax payable by all Muslims on their personal net worth, that obviously goes to eradicate poverty. You look at SDG 8, decent work and economic growth. Obviously Islamic finance is linked to the real economy. So actually one again would argue that SDG 8 is fulfilled through Islamic finance. SDG 10, reducing inequality. And again, touching on the points that we were discussing this morning, if we were to adopt Musharaka and Mudaraba, more equity-based financing, it would help to reduce inequality. And obviously the main one that's been touched upon and discussed many times, SDG 13, which is climate action, and there's been a lot of discussion around green sukuk, green loans. But if you take a step back, I think the cynical side of me would say this has actually been more coincidental rather than deliberate. The fact that there's a lot of crossover between Islamic finance and SDGs and PRBs is simply because from a business point of view, it makes sense to label a green sukuk as a green sukuk because it attracts more investors and you tick a box from an SDG perspective. But maybe we should be looking at this from a different perspective and actually what it means from a CIMB point of view, from a Gatehouse point of view, from an industry point of view, and how we can actually change the agenda and drive the agenda forward. So maybe, Rafi, if we start with you and your views from a CIMB perspective, what this means to CIMB as an institution and the changes that you feel that CIMB can have and make.
Sure. So for the CIMB group, we embarked on this journey back in 2016. We wanted to define what we mean by impact. Obviously, all institutions are looking at creating positive impact. So we wanted to define it more clearly. So in 2017, we made a position statement setting out a clear vision to be ESG compliant, in addition to being Sharia compliant. And what we mean by ESG compliant is that we would ensure that we have policies in place that would eliminate or reduce negative risks and proactively increase positive impacts. Then when we look at impacts, we want to make sure that those impacts are linked to several SDGs. Obviously, 17 SDGs would be a lot at the first phase, so we have chosen 7 SDGs, and we have come up with a 3-year plan. So we had a position statement, we have come up with the policies, internal policies that would look at how we reduce negative impact and how do we increase positive impact over a period of 3 years. And we will then align those impacts to SDGs. So we have chosen 7 SDGs. Now in 2019, we are building capacity. So there are several Ps. What I mean by Ps is several areas that we need to look at. One is the position statement, So you make a public announcement, this is your intent, and then you must have a policy to materialize that position statement. Then you have to have the right people. So we are now at the stage of building capacity to enhance our people's understanding of the impacts that we need to reduce and also promote. And we need to have the process in place. So we now have a full process where we have process to assess the risks involved in all our financing, and how do we then come up with a 3-year plan working with the customers to reduce. So if you're a plantation company, so there would be risks like deforestation, peat soil management, labor policies. So all those risks will be identified, and we will then have a framework to measure those risks and mitigate the risk. Then you need to have the products. The products will come in terms of beefing up the positive impact. So we are now launching products. For example, we have home financing for green buildings with a concessionary rate of financing to attract more buyers to buy green certified buildings. We have a favorable rate of financing for green cars, electric cars, hybrids. So you need to have focused products to build this positive impact.
And just on that, Rafi, just on that, when you're looking at that, are you looking at balancing profitability with
Absolutely.
overall purpose? So
Yeah.
you're not going for the highest return?
So if you look at banking returns, average is coming down. Year on year, we are seeing banks struggling to even get above 10% ROE. So what we've realized is our shareholders, we have engaged with our shareholders to look at a more moderate return on equity
Okay.
and measure this impact, the social impact, the impact to people and planet that we are creating. So we need to first articulate what we mean by impact, choose certain SDGs, and have a clear plan towards meeting those SDG targets. The final part is the performance benchmarking. So there is a developed methodology called theory of change that will look into, for example, what you mean by intervention, then what would be the activities that you will conduct to achieve the output, and the output will then lead to certain outcomes, and then you can measure the impact from the outcomes. So all these 5 areas need to be fully understood and then measure. Some institutions have even tried to monetize the impact. So if you have created X amount of impact in SDG 3, how do you then put a monetary value to it? It's a science that is being developed, but I think all this will eventually lead to what we call the true cost or true value of investment. So although the ROE could be 10%, the true value of investment could be 15%, because you are creating social impact, you are creating positive impact to people and planet. So I think it's still an evolving science, and we are delighted to be part of this progress.
Thank you. And if I can come to you, obviously Gatehouse has chosen to sign up to the PRBs.
Yep.
Could you just maybe explain the journey?
Yeah,
the bank has
we're
gone through?
probably not as far down the path as CIMB, if I'm being honest. We are at the stage of, we felt there was significant alignment between being Sharia compliant and the principles for responsible banking. We're currently looking at the SDGs and looking at how we relate them to Gatehouse Bank and the impact, the change that we can actually have ourselves, the impact we can have as a bank through our products and services, through how the bank operates. And then obviously part of what appealed, I think, to Gatehouse of the UN programme is the fact that it builds a framework so that as we grow, we can measure and look at what impact we're having, hopefully obviously increasing the positive and decreasing the negative impact on society. And also it builds in a benchmark and also the ability to learn from others as well, because we're a relatively young bank and a relatively small bank. So from our perspective, it's about providing us with that framework to ensure that we are having the right impacts on society.
So you're also looking at purpose beyond just profit? Or is it too
Yeah,
early?
I think you have. I think there has to be a look at purpose beyond profit. That's part of the audit we need to do initially, to look at what impact are we currently having on society through our products and services, but also through our colleagues, through our offices, through the impact on the wider environment.
Yeah.
So yeah, it's a broader view than just profit.
So obviously it's great to see one of the Islamic banks in the UK, one of the leading banks in Asia Pacific, embodying these principles, and obviously from what you're describing, these principles have been approved by your shareholders, have been approved by management. There's a buy-in from everybody. So maybe we could just talk about the journey you went through to get to that position, so other people in the room can say, well, how do I go and speak to my shareholders about this? How do I engage with my board about this? How do I engage with my Sharia board about this? Because you need that buy-in at all levels. Would either of you like you to comment on that?
Yeah,
Sorry, go ahead.
So when we started the journey in 2016, there was absolutely no buy. The management felt that, look, why us? Why can't other banks do it? The board was quite agnostic at the beginning. The Sharia scholars felt that, it's already been done, so we don't need to really look at beyond the Sharia compliance, because once we say it is Sharia compliant, then it's deemed as SDG proof. But what happened was the shareholders are the one. We had, we are a listed company, so we had more than 25% of our shareholding owned by large funds, particularly funds in Europe. They started asking about our ESG compliance, what is our SDG impacts. So that created the momentum. And we are also owned by a sovereign wealth fund. They also started asking, because they have something called true value cost, or true value methodology, that they will look at ROE plus minus the impact, whether negative or positive. So that gave us the momentum. And then the board bought in 2017. And then by 2018, we already had the policies. We have a dedicated team, and we are now working on the process. The process is quite tedious.
Yeah.
Because measuring impact, we have hundreds of subsectors. So if you take plantation as a segment, it probably has about 17 subsegments. From primary, the guy who's actually planting the palm oil tree, for example, all the way to the miller, all the way to the one who trade in the palm oil. So each subsegment has different basket of risks, and you need to have a proper methodology to assess the risk and then take the right measure to reduce the risk. So it is a long, tedious process. So what we have done, we could not possibly look at all the sectors. So we have chosen a few high-risk sectors, like primary agriculture, forestry, timber, forestry, chemicals and mining. So these are probably would lead to 60-70% of the negative impact in a developing country like Malaysia, and we are just focusing on that for the first 3 years.
What about from Gatehouse?
Yeah, from our perspective, it's been very similar. This was something that was driven very much by the executive team, but it was very much based on feedback from colleagues about what they wanted to see the bank becoming and being more responsible for. And it also echoes with what lots of our customers tell us about what they want from their bank. I think there's a growing demand from the customer ultimately that they don't just want good products and services, they want to know how the bank operates, they want transparency, they want to understand a lot more about the bank before they're willing to deposit their savings with us, take out home finance from us. I think there's a growing interest in how banks operate, and we see that as part of the reason why this is the right thing to do.
Not in our part of the world.
Yeah.
In Asia, I think it's not bottom-up driven. Customers are quite agnostic. I think it's more from the shareholders' perspective. Yeah, and we were quite fortunate because our former chairman, Dr. Sri Nazir Razak, he was very much influential in setting the direction. I think he was a game changer who led the group to basically shift towards it. So it came from top down.
Okay. Richard, just to bring you into the conversation, the task force that you're putting together for Islamic finance SDGs, I know it's early days, but how do you envisage, for example, somebody like a Gatehouse who's obviously here in London, but somebody like a CIMB who's obviously very active in this space and trying to make a change? How do you envisage entities like this having an impact on what you're trying to achieve?
Right. Well, I think our view from Islamic Finance Council has always been that our work has not just been restricted to the UK. I mean, Islamic finance is a global sector, and the SDGs are clearly something that the Islamic finance sector needs to engage with. Picking up from what you just said, Rafe, I mean, you were saying in Malaysia this has not been consumer driven, but you know, Gandhi was saying it's been consumer driven in the UK, which goes back to a point I was making in my short presentation, that different parts of the world are going to be at different stages and have different needs, different concerns and different issues. So I think it's early days, but our thinking behind the task force is to try and engage with entities from different parts of the world so we can share experiences, share best practices, understand the problems and challenges that Islamic banks in one jurisdiction have faced, which may help other Islamic banks and institutions in other parts of the world navigate those similar or same challenges. So I think that's our thinking at the moment, but watch this space.
Yeah. Let me pause there and just open it up to the floor for any questions.
Question to Rafe. Have you had any attempt to measure return on this kind of investment, this sustainable development strategy? Any real commercial return on that? Have you thought of doing anything?
So when we looked at, when we were getting buy-in from the management and the board, we had done a lot of research. We worked with INCF and WWF to come up with the data. And we found a lot of literature is already available to show that a company that is ESG compliant, and this research covers a period of 20 years, has overperformed the companies who have not been ESG compliant. So it doesn't mean that if you're ESG compliant that you're going to have lower return on capital. In the beginning, maybe, because there is a lot of constraints. But I think genuinely a company that is not polluting the environment, being conscious about their responsibility to both people and planet, would be good companies to deal with. They would most probably be more resilient in a downturn compared to a company that is not ESG compliant. So there's data to prove it. And in our own process, we found that, obviously we cannot be banking everyone. So in 3 years' time, we will probably have a smaller pool of customers, but more engaging. We could have deeper relationship than a very wide customer base. So overall, we are not anticipating an impact to our returns. But I think we will be more focused on the type of customers we'll be banking with.
So can I just add one more point? Do you expect that government should give any incentives?
Yeah. So really good point.
For these incentives?
So we have asked the central banks that a company that is ESG compliant should be having a lower capital charge for the financing that we give. So they're asking for data. So if we can prove over a period of time, and we are trying to build it now, but what probably will happen is the central bank is not keen to bring the capital requirements, but they may impose a higher capital on those companies who fail to comply. I think that's what probably will happen in the near term. So you'll end up paying more, like a carbon tax. You'll pay a higher cost of financing if you fail to disclose your compliance. It's going to happen very soon.
There's a question, Mushtaq.
Hello, thank you. A few centuries ago, decades ago, Kaiser Group in America, they did a study and they found that having an environmental impact assessment in their work and in their projects had a direct correlation with EVA, shareholder value. Do you sense, any of the panelists sense, that a similar correlation is developing, not only in terms of EVA, but also other aspects like sustainability, social impact, development impact? And if not, why not? And how long will it take for this sort of correlation? Because, this is important in the sense that the visibility, the optics of the whole debate increases immeasurably in that sense. Thank you.
I think there's this is all about sustainability. This is all about sustainability from an environmental perspective, also from a bank perspective. It's taking the long-term view. It should have a positive impact, I think, on shareholders and how shareholders view organisations. I think it will also, as the world is changing and more people, as I've said before, are looking for not just banks but anyone they engage with, any business they engage with, to have a responsible approach to how they do business. I think it does have an impact on shareholder value, whether that's pounds and pence or whether that's long-term investment and buying into an organisation. I don't know yet, but I would imagine that it must have an impact.
So it's beyond shareholders. So whilst we have data to prove that the ESG compliant company has performed better than a non-ESG compliant, this data is for listed companies. Second is, we have seen that it also has a huge impact to the staff. When we did engagement with the various stakeholders, including our employees, we found that the millennials are very keen to work for firms who have this positive impact, objective. So it satisfies our key stakeholder, which is our employees. It satisfies our shareholders, and I think eventually our customers will open up to this. Like what we've seen in Europe and UK, eventually the customers in ASEAN will also wake up and say, look, I want to put my money in a bank that is responsible. So I think it is going to meet various stakeholders' requirements.
Any other questions from the floor? The question here.
From Bismillah, from the point of Islamic finance, it is usually there are 8 unique characteristics regarding to when you compare to the conventional finances. Therefore, all of the 8 unique characteristics talk about the sustainability, responsibility, and other issues. For instance, we can take the first unique characteristics, interest-free. Then the second one is there should be underlying assets. Therefore, the third one is speculation, like the so-called uncertainty, the excessive uncertainty, or they call it in Arabic gharar, or gambling, something like that. All these issues from the first to 8, it talks about sustainability, it talks about responsibility. Therefore, the stakeholders, the first thing is, I'm sometimes giving the training regarding Islamic finance and time management under this issue. All trainers are asking me a question: how can the banks are profitable? If they avoid the interest, how can they are profitable? But Islamic finance, it doesn't talk too much about the banks, but it is the responsibilities about me and you. Yeah. Therefore, all the shareholders should be responsible regarding to the profit other than the purpose. And therefore, I think there should be the awareness then. How can we create this awareness to the wider community?
Maybe I will just comment and then obviously welcome your comments. I mean, as I was saying earlier, there is a strong alignment and a crossover between Islamic finance and SDGs and PRBs, but you could actually use Islamic finance from a Sharia perspective to provide istisna financing for a coal-fired power station, which ticks the box from a Sharia perspective, but doesn't tick any boxes for SDG. So what we need to see is people moving away from that, and actually, rather than it being coincidental or incidental, actually SDGs are driving the thought process. I mean, that's my view. Yeah. Anybody else got views on that?
I think you're spot on. I mean, from Gatehouse's perspective, we're quite fortunate in that we're not involved in the big industries that really will have that negative impact, as it were. So we see, I mean, we're mainly involved in property, UK property finance. So we're looking at how we can have a positive impact from an environmental perspective by looking at green energy, looking at the types of materials used in the buildings that we through our build to rent funds, we manage 1,600 properties across the UK. So again, how can we use green technology to make those cleaner? But I think you're right. It's about how the SDGs fit with the industries and the sectors as well that people operate.
Final question?
Okay, thank you. Just a question. So it's interesting. We know in Islamic structures in Sukuk we've had Sharia risk, and we've seen in the Dana gas affair that the issue of Sharia compliance. My question applies to Sukuk and conventional bonds, and somewhat from a legal and commercial perspective. What is the implication legally of non-compliance if you want to do an SDG Sukuk or an SDG bond? What happens if you don't meet the social outcomes, and what is the legal implication of that? And also, how is that being interpreted as a commercial risk right now? The whole Islamic finance industry, we've had to deal with the legal Sharia non-compliance risk. Does this add an additional layer, and how is that understood?
Yeah. So, I mean, we as a firm actually have been involved in a number of green sukuk. We've done the government of Indonesia sukuk for the last 2 years. We've done the Majid Al Futtaim green sukuk. The interesting thing is that even though all the sukuk involve underlying assets, when you're looking at the green sukuk, actually all people are concerned with is the use of proceeds. What are the proceeds going to be used for? And then you have the environmental framework set out in the prospectus. Now, a breach of that environmental framework actually doesn't trigger any consequences from a legal perspective. All it means is your green investors will exit if you breach the framework, so it has an impact on the secondary market trading. But maybe one of the things that we should be thinking about is actually when you're doing a green sukuk, it's not just the use of proceeds, it's actually what are the assets that are being used to structure the sukuk in the first place. Because again, in theory, you could use a coal-fired power station to put together a green sukuk as long as the proceeds are being used in a green way, which obviously is slightly counterintuitive. Any comments on that?
I think you answered most of it. I mean, the risk that we take, so we just launched an SDG bond for CIMB Group. The issue amount is about $680 million. It will be linked to assets that meet certain SDG requirements. As Qudeer pointed out, the risk we take is if there is some element of impact washing, the greenwashing they call it. If we inadvertently put an asset which didn't have an SDG impact, as Qudeer pointed out, it doesn't nullify the issuance, it doesn't make it a default event, but we have to disclose. So the level of disclosure differs from issuer to issuer. There's no standard or uniform disclosure. What the market, like the green bond requirements are, or SDG bond requirements are, you need to have a framework, like a Sharia framework. You need to clearly define the use of proceeds. You have to clearly define how you would categorize as an SDG asset. And then you need to look at what would you do until you invest, so the liquidity management part. And then the disclosure. Some banks have independent auditors who would look into the investment, and then they will declare every year. Some don't. So it's up to the investors whether you are comfortable investing in an instrument that doesn't have a third-party verification. So market would evolve. Eventually there'll be uniformity.
Yeah. Mushtaq wants to ask another question.
On this green sukuk, are you implying that, I know the Indonesia one, that the third-party certification from Switzerland?
That's third-party
Yes.
opinion on the structure,
Yeah, okay.
on the structure, on the framework. But it's not a continuous.
So you're implying that the opinion from
It's
Switzerland
a-
doesn't
it's a-
matter in this?
It's a one point in time verification that the framework that has been set up is in compliance with green bond principles.
So there's no continuous monitoring or?
It's monitored by the issuer. They will disclose these are the assets that we have put in the green portfolio. But investors may require in future, I guess.
Yeah, so I mean,
What is the
obviously,
trend you see?
yeah, obviously the money that's coming from green investors, they themselves will want some kind of comfort
Yeah.
that the parameters and the framework is being complied with. But the important point is that if that is breached, it doesn't have a legal implication. All it means is that a green investor will sell it in the secondary market.
Well, in Rafe's, I think there needs to be a serious further engagement with Switzerland to come up with this sort of structure where you have this continuous monitoring and, architecture in place. Otherwise,
I think when the market grows, there will be more demand because it's a matter of scale. Today, the cost of independent verification is quite high, but once the market grows, I think the economy of scale will allow the cost to come down.
So just to wrap up the session, we're a couple of minutes over, but it's definitely refreshing to hear that the UK government is putting effort behind this, and I think that's very, very positive. It's definitely refreshing to hear that one of the Islamic banks in the UK and one of the largest banks in Asia Pac is putting the purpose ahead of the profit. I think that's very refreshing, and we need more of that to drive this forward. But any concluding remarks from any of you?
No, I guess all I'd say from our perspective is we're very much at the start of this process. You know, under the UN Principles for Responsible Banking, we've got to carry out this initial audit to have a full understanding of where we currently sit before we then set targets to show improvement. CIMB sound like they're far ahead of us at the moment, but obviously this is the very start, and yeah, hopefully going forward, the bank will be able to have more of a positive impact on wider society and the environment.
Okay. Thank you very much.